Guys, this is S&P 500 weekly technical analysis for the week of June 10th. Now that the S&P 500 has regained its bullish movement, it is going to move up, but there will be a few restrictions, okay, and the primary restriction is this, the trend line. So if you notice that yesterday on Friday, S&P 500 moved up, it hit the trend line and it failed. This was my second update to my Patreon community members on June 7th, and here I've confirmed that the S&P 500 has hit the trend line, okay, and also the same was the calculated resistance level. This means that now any further bullish movement is not expected, and also there is a very heavy probability that the S&P 500 will close below the trend line, because in 95% of the cases this happens. However, S&P 500 has closed in a manner which still supports some bullish movement. So I will discuss all of these things, the levels, okay, these the marks, the support and resistance level, and the Dow Jones, the movement, moving averages, everything in this in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So now guys, before I discuss the agenda of this S&P 500 weekly technical analysis, let me give you a quick recap of what we were anticipating last week and what was seen in the market. Last week we were anticipating 1% movement in the bull side, okay, 3% movement in the bearish side, and more bull side movement only if the S&P 500 breaches its recent all-time high. Okay. So from the previous closing we have seen, okay, 1% movement here, but the S&P 500 managed to breach the previous high on Wednesday because of Nvidia and Apple. But at the same time, if you notice the Dow Jones gained only 1%, exactly 1% in the entire week. Okay, although there was no bearish movement because it was sustaining inside the Ichimoku cloud. Okay, but exactly 1% bullish movement from the previous close, May 31st. Okay, it gained only 1%, and S&P 500, because it breached, okay, that was the reason that it moved up, okay, beyond 1%. And this, now other than that, it was confirmed that on Monday, on 3rd of June, okay, irrespective of anything, there will be a tug of war between the bulls and the bears because of the different difference in the weekly chart and the daily chart. Okay, and irrespective of anything, S&P 500 will come down because of the weekly chart. Later it can it can trade bullish or bearish, okay, so that is different, but it will surely 100% it will come down. So what we have seen that on Monday, it gave a good gap up open and it came down heavily, okay, it sustained, and then again the same picture, the same thing, last 30 minutes movement, okay, last 1 hour movement, okay, it retraced. So last week the surprise was the breach of the recent high and then a movement above the recent high, but the Dow Jones, it did not surprise because Dow Jones gave exactly 1% movement and it was under pressure. Okay, then the S&P 500 hit the trend line, closed below the trend line, okay, and this was there. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart, the situation has improved for the S&P 500, and the S&P 500 is more bullish. It is not absolute bullish, it is more bullish. Okay, it is absolute bullish on the daily chart. Okay, so because of that thing, okay, S&P 500 is expected to remain bullish. Okay, especially because, see, if you notice the closing of the S&P 500 was above the previous high. Okay, so that is another reason. I will discuss everything in detail, okay, on this the weekly chart. And once again, the weekly chart is the big picture, a month or a quarter or so. Okay, the second point of the agenda is the S&P 500 technical analysis on the daily chart. So daily chart, the picture is very clear because the S&P 500 has regained its absolute bullish trend. Okay, and secondly, the closing, final closing on Friday was above this the recent high. Okay, so the situation has changed, and this means that now any bearish side movement is expected to be limited to the moving averages themselves. Okay, and it is expected to move up, but upward movement will be restricted by the trend line. Okay, I will discuss more on the daily chart. Some technicals have changed, especially the MACD. I will discuss the MACD. Okay, the third and the last point of the agenda is the probable movement of the S&P 500 from June 10th, which is Monday, to June 14th, that will be Friday. So probable movement means what is going to happen. So last week, okay, it was like 1% in the bull side, 3% in the bearish side. Bull side movement will be up to the previous high, the recent high, and only in the cases, and only in an exceptional case where the S&P 500 breaches the recent high, there will be more bullish movement. Otherwise, it will be up to 1%. Okay. Other than that, it will find support at the moving averages. Okay, in the bearish side, there was a condition. Okay, if it loses that the strong support, in that case, it will fall. It will come down. Okay, and I've discussed many other conditions. Similarly, I'll discuss these the conditions. Okay, and this is the last point of the agenda: bullish condition, bearish condition, levels. Okay, moving averages, MACD, etc. And guys, once again, let me remind you that when I say the probable movement, I cover the probable movement in the weekly chart as well as in the daily chart. Okay, and then rest in the this is the last point of the agenda. So that is why I recommend you to watch this the entire weekly technical analysis to get an idea what is going to happen, what exactly is happening. Okay, and what are the changes in terms of the technicals and everything. Okay, that I discuss on the weekly and the daily chart. So guys, now I am going to discuss the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. So guys, this is the weekly chart. Okay, and here I'm going to discuss the first point of the agenda. Okay, so weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, one candle means 1 week. So before I discuss the technicals and the levels, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now on the weekly chart, first comes the candle. It's a bullish candle. Okay, there is no defined shape of the candle, but the closing of the candle is above the high of the previous weekly candle. Previous weekly candle was in open equal to high condition. That is why this closing matters, because this closing has now brought the S&P 500 in a comfortable position to sustain, okay, or to move up. Even if it struggles to move up, then also, okay, there will be some fall, but this fall is expected to be limited, okay, and then it will sustain. However, there will be conditions for the bearish movement. It is not 100% that no matter what, okay, it will sustain, because if there comes fall, okay, more than a certain percentage, or if it breaches some of the levels, in that case, okay, this won't be able to do anything. This candle won't be able to support, rather it will come down. Okay, but as long as it is sustaining, okay, holding above this the confluence zone, okay, or the strong these the support levels, it is bullish. Okay, so it is so there is no problem in that, right? So this candle simply represents the bullishness, okay, and nothing else. Bullishness means that next week on Monday we can expect, okay, some bullish movement. There is no confirmation on the gap up open or the gap down open now. There is simply that we can expect some bullishness, okay, on Monday, or even if it try to come down, then also it will be restricted. It will struggle to come down, okay, rather it will try to sustain and then it will try to move up again. Okay, but this bullishness will be again restricted to this the trend line, right? Now let's talk about the technicals. In terms of the technicals, if you notice, still clear fan out in the moving averages. Okay, everything is bullish. Okay, now here MACD, once again MACD is still trading bearish. Okay, looks like that the MACD is going to give a bullish crossover. Okay, and if that happens, if next week if there comes a green candle on the weekly chart, okay, then most likely it will be able to give a bullish crossover, but it will be confirmed only on Monday, okay, as per the movement of the S&P 500, whether there will be a crossover or not. Because as long as MACD is trading bearish, okay, then it doesn't matter what other technical indicators are doing, because the MACD still has the potential to bring it down. So that is why we need to be careful with the MACD. So MACD is bearish. Okay, there is still no crossover in the MACD. However, at the same time, when you notice the stochastic RSI is kind of, it is trading flat. Okay, means it is trading flat. It is neither bullish nor bearish. Okay, So next week will be crucial in terms of the MACD and the stochastic RSI, because if there comes a green candle, in that case definitely means stochastic RSI will go bullish, but we need to look into the MACD. Most likely MACD will also go bullish. When MACD and the stochastic RSI, okay, they will go bullish, in that case that will be the direction of the market. Okay, other than that, now on the weekly chart, S&P 500 is going to enter into the overbought condition. Okay, it was in the overbought condition for some time. Okay, and then that forced the S&P 500 to come out of that the condition. It came down. Okay, and now it is going to re-enter into the overbought condition and also into the saturation. Okay, so that will be problematic. Okay, and remember, on Wednesday, okay, when we say that the market is going to sustain bullish, it can sustain bullish only until Wednesday, because on Wednesday FOMC, okay, it is scheduled and the decision will be known, right? As of now, this bullishness, okay, or this sustained movement is based on the speculation. Okay, there is a very heavy speculation that the Feds will go for the rate cuts once again. Okay, this is speculation is there for last many months. They were anticipating that the rate cut will be there in the month of March, then it was June, and now it is September. Okay, so it doesn't matter whether it is March, June, or September. Okay, they are simply keeping the stock market bullish. So this is just an excuse. Okay, this thing or that thing. And once again, the Federal Reserve Chairman himself, okay, he is also fueling the bullish market, because in every meeting he says that we are data dependent, and he doesn't confirm, okay, whether there will be a rate cut or the rate hike. So he keep the things like this, and this further allows the stock market to speculate more and more. Okay, so now there is a lot of speculation, very heavy speculation. Okay, so let's see, okay, what will happen on Wednesday. But whatever will happen, and if you are my Patreon community member, okay, then I will give you these updates back to back, and accordingly you can make changes to your trade. Okay, yes, so overbought, okay, and the saturation and all of these things. So this means that on the weekly chart, S&P 500, if you notice, okay, it will be considered like 75%, 75 to 80% bullish. Now let's analyze the chart of the Dow Jones. Okay, because we might think that it is going bullish. Okay, there will be no pressure, nothing. Okay, or it might come down, etc. So this picture will be more clear through the Dow Jones. If you notice here on the weekly chart of the Dow Jones, earlier there was a miss in the crossover. Now that crossover is again there in the picture. So if there comes a bullish candle, in that case this crossover will not happen. Certainly it will not happen. If there comes a bearish candle for some reason, let's say on Wednesday the Fed chairman, okay, he says something which goes against the market, there comes a good fall, then most likely there will be a crossover. This crossover will happen after October, November. Okay, means more than 7 or 8 months. In that case it will align to the bearish side. If there comes no crossover, it will remain bullish, and it will support the bullish movement in the S&P 500. So as of now, although there is a clear fan out in the moving averages, but the closing is in between the moving averages, so it will not be considered, okay, as bullish. Through Bollinger Bands, Ichimoku cloud, okay, it is bullish. And here comes the MACD. If you notice, okay, this kind of situation, okay, I have shown you here in case of the S&P 500. Okay, we were anticipating that it will give a crossover, it failed, and now it become more bearish. At the same time, the stochastic RSI is bearish, MACD is bearish, stochastic RSI is bearish, and this is the direction of the market. Okay, and this is the reason why we are seeing a limited bullish movement. There is a bullish movement, but a limited bullish movement, and we are seeing that the market is struggling. Okay, so that is again there. So the situation is not expected to improve, and yes, but the situation is going to worsen a little more. Why it will be like that? The reason is the stochastic RSI. If you notice, stochastic RSI, when it was coming down, 1 red, 2 red, if this candle would have closed as red, in that case the K channel of the stochastic RSI was supposed to hit 0 next week. When it hits 0 next, means whenever it hits 0, and if you have subscribed to my YouTube channel for last many months or years, then you know that whenever it hits the zero, means saturation, okay, in this the bearish side, then there comes a technical bullish retrace, a good bullish retrace. But now because of the formation of this the green candle, okay, it is not expected to hit zero in the next week. This means that if there comes, okay, let's say on Wednesday or from Wednesday or Wednesday onwards, if there comes a very heavy fall, okay, then also it will not hit zero. And because it is not going to hit zero, means there will be no technical compulsion for that for this the bullish movement. Okay, this means that one more bearish candle will be allowed. Okay, so because of the formation of this green candle, okay, it is not going to hit the absolute zero. So now what we can see here in case of the Dow Jones on the weekly chart, that on the weekly chart Dow Jones is 50, okay, or more into the bearish side, right? Okay, now remember last week what I mentioned in case of the S&P 500, I mentioned that the situation here on the, I think that was a daily chart, that the S&P 500 was 50 on the daily chart, but it was in the bullish side, it was more into the bullish side. Okay, and we have seen okay, that thing that it was able to move up, it remained bullish, it was able to move up. Okay, because although it was 50 on the daily chart, but it was more into the bullish side. Similarly, the Dow Jones here is 50 but it is here in this the bearish side. Okay, this means that the pressure on the market, it will remain as is, and any bullish side movement will face resistance or restriction, and any bullish side movement is expected to be limited. Okay, and yes, but once the Dow Jones clears these the moving averages on the weekly chart as well as on the daily chart, okay, that will then help the entire market to move up, because in that case it will turn or it will come more into the bullish side, although it will remain under pressure, but then it will be free to move up. Okay, not heavily, but okay, in some manner. And this bullishness, this little bullishness in the Dow Jones will help the S&P 500 and the other indices to move up, right? So this is the picture here. This means that this 75% bullishness on the weekly chart in the S&P 500, it might not be realized as such, okay, unless Dow Jones comes out of this the condition. So definitely there will be, you know, some bullish movement in the S&P 500, but this bullish movement will be or is expected to be limited. So I will discuss more of this in the third point of the agenda, that is the probable movement. So guys, I have one more information to share with you. This is my stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Through this program, I teach the movement, hacks, strategies, trend analysis, technicals, predictions, support and resistance levels, and to predict even before the things happens in the stock market. Okay, and this is purely technicals, okay, and the patterns. Okay, and the motto of this program is to help you become self-reliant. And also whatever I am going to teach here, it will be applicable to any stock, any index, any currency, any commodity, crypto, okay, or anything that is traded in the stock market, because I'm going to talk about the technicals, okay, and the patterns, the pattern analysis, which is applicable to everything. And this program is delivered one-on-one basis, okay, and this is my email address whenever you want to participate in this the program. And this is the Google spreadsheet. More information is there in this the Google spreadsheet. And when you open that the Google spreadsheet, then you will notice that I mention everything in detail from basics to advanced, what I'm going to share, what I'm going to teach, okay, options strategies, okay, options calculations, calculator, okay, live options calculations, okay, the strategies, etc. And then how to predict the movement of the stock market, movement of the stock, movement of an index, okay, or how to deduce the trend, everything, okay. Then these are some important terms and conditions, okay, and these are the snapshots of the recent meetings. So guys, whenever you want to participate in this the program, or if you have any questions that you want to ask, okay, then this is my email address. You can simply send me an email, and I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda, and here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Okay, daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. So before I discuss the daily chart, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily and the precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, on this the daily chart, let's first analyze the candle. If you look into the candle, okay, it looks red candle, but in actual, okay, it's a thin technical bullish candle. Okay, what it means, and also because this candle, okay, it was formed on Friday, okay, means its closing will matter. So the closing of the candle was the previous all-time high. Okay, so the kind of the candle it is, okay, and the closing. So considering all of these factors, this candle supports the sustained movement or the bullish side movement. Okay, this candle, but this candle does not confirm any gap up open or the gap down open. And if you have subscribed to my YouTube channel for last many months or years, then you know that generally I'm able to predict the gap up or the gap down, and it happens. Okay, but in this particular case, okay, because of the formation of the candle, the kind of candle it is, and the closing above this the recent high, okay, it indicates that there will be some bullishness. Okay, and even if there comes some bearish movement, then also S&P 500 is going to sustain. Okay, that's it, nothing else. Okay, now in terms of the technicals, if you notice, there is clearly a fan out in the moving averages. Okay, there was this a crossover in the moving averages, but on this day, Friday 31st of May, in last 30 minutes there came a very heavy bullish movement, more than 1 or 1.5%. So because of that heavy movement in just 30 minutes, okay, the situation has changed. Otherwise it was going bearish to come down to this the Ichimoku cloud. Okay, but now because of that this particular candle, okay, everything has changed, and then finally this candle. So these two candles are similar. Okay, just a very heavy push. Okay, so no known reason. Now moving averages, okay, and all of the technicals here, okay, are supporting the bullish movement. And here now you will notice once again, okay, a change in the MACD. Okay, recently also we have seen, okay, a very rough movement in the MACD. Okay, this rough movement was because the market was heavily overbought, okay, heavily saturated, but still, you know, they were keeping it bullish. Okay, but then at one point of time, just, okay, it gave up and it came down. Okay, now this the same kind of the rough movement is expected here. Okay, so it was coming down. Okay, so and MACD was giving a proper movement, and then it was forced to give, okay, a bullish crossover. So it clearly shows a struggle. Okay, whenever this kind of situation is seen, then this situation clearly indicates the struggle. Okay, struggle means that when the MACD is bearish, this means that the market want to come down, want to cool down, but somehow someone is trying to keep it bullish. Okay, similarly, struggle in the bearish side means that the market want to move up. Okay, and technically it is allowed to move up, but still someone is keeping it, okay, in the bearish side. Okay, so that kind of a struggle. Now that the MACD is bullish, okay, and also if you notice the stochastic RSI is also aligned bullish. So on the daily chart it is clearly bullish. It is neither overbought nor saturated, but yes, on the lower level charts, okay, it is in some manner it is overbought and saturated. Means if there comes more bullish movement, okay, for just 1 or 2 days, then the lower level charts, hourly charts, 4-hourly charts will be okay, we will see that these charts are now heavily overbought and heavily saturated. Okay, so this means that on the daily chart here the picture is clear. It is 100% absolute bullish. Okay, in terms of the Dow Jones, the picture is not that much clear. The reason is, if you notice, there is the moving averages are bearish, whereas in case of the S&P 500, moving averages were bullish. See, it is very easy to manipulate the S&P 500 and the Nasdaq, because in order to manipulate the S&P 500 and the Nasdaq, you just need to pump, okay, means either to buy or sell, okay, heavily Nvidia, Apple, Microsoft. Okay, these are the three primary stocks. Okay, whatever happens in these three primary stocks, okay, it is reflected in the S&P 500 and the Nasdaq. But when it comes to the Dow Jones, then in order to manipulate the Dow Jones, okay, not just the tech stocks but the Goldman Sachs, okay, Microsoft, and generally you will notice that unusual movement happens in these two. Okay, then comes the UNH and Home Depot. Okay, so when these stocks, okay, are means whenever there comes heavy selling or heavy buying in all of these stocks, okay, or at least three of these stocks, then only the Dow Jones will give that kind of movement. But the other stocks of the Dow Jones, okay, like CRM, okay, Triple M, so the weightage of the other stocks, okay, that is also considered. And Apple, it is more than 7% or 8% in Nasdaq and S&P 500, but it is like 2% or hardly 1 or 2% in the Dow Jones. So the movement, that bullish movement or heavy bullish movement of Apple, okay, it doesn't matter. And Nvidia is not part of the Dow Jones. That is why you will see the Dow Jones is giving a very clean movement, very fair movement, but the S&P 500 is, okay, this kind of movement. The moving averages are clearly bearish, managed to sustain above the Ichimoku cloud, okay, and no, still the MACD is bearish. Change in the stochastic RSI is trying to go bullish and is struggling, okay, and through it is neither overbought not saturated, but it is more into the bearish side. So through all of these are technical indicator, it is more into the bearish side, or we will say that the Dow Jones is 70% or 65% bearish, not bullish, bearish. Okay, whereas the S&P 500 is 100% bullish, right? So what it means? This means that until and unless Dow Jones comes out of this the condition, and Dow Jones at least comes in the neutral condition, okay, neutral condition will happen only when the S&P 500 sustains above these the moving averages. All of these are moving averages, this is the Dow Jones sustains above all of these are moving averages and closes above all of these are moving averages, then only that kind of movement will be seen. Means then only we will say that now the Dow Jones is 50-50, and then it will allow the bull side movement. Okay, otherwise it will not. Okay, but this picture will be more clear on Wednesday, okay, when the FOMC will be means when the meeting decision will be published, and on the same day the CPI data, okay, inflation data will also be published. So Wednesday will be, heavily volatile, but whatever will happen, I will keep you posted through these daily and the precise updates of the S&P 500 from Monday through Friday. And guys, it is not just about these the daily updates that I gave from Monday through Friday to my Patreon community members, but also about these the stock market opportunities that I give to my Patreon community members, minimum 5 to 10 every week. So I give these the updates, okay, before the open of the stock market, once the first hourly candle forms, then the 4 hourly candle forms, and then the final update. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will notice that there are these two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these, then you will be getting the daily S&P 500 analysis, updates, probable movement every day from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, years, and they are getting the daily precise updates of the S&P 500 every day from Monday through Friday, as well as the stock market opportunities in the premium stocks. And also they are very well aware of what is happening, what is going to happen, what has happened, everything, okay, in the stock market and in the S&P 500. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis, and here I will give you the probable movement of what is going to happen in the S&P 500, okay, and also in some manner and also in the Dow Jones in the next week. So from Monday through Friday, whatever is going to happen, I'm going to discuss here. And guys, once again, I would request you to watch the weekly chart section and the daily chart section if you have not yet watched, because I have discussed many of the important aspects which are going to impact the movement in the next week. So I've covered some of the probable movement there on the weekly chart and the daily chart. So now here the probable movement, a few things that you must understand. Number one, and I think that this will be the only thing. FOMC meeting will be held, and FOMC decision will be published on Wednesday. Then there will be the press conference, and this time the projections will be published. SEPs. So means it will be very volatile. And also at the same day before the open of the stock market, the CPI data and the core CPI data, means the inflation data, will also be published. This means that Wednesday will be heavily volatile, and you must be very, very careful. And guys, yes, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And whatever is going to happen on Wednesday, or Monday, Tuesday, Wednesday, Thursday, Friday, I will keep you posted through these, the daily precise updates of the S&P 500. And if you are my Patreon community member, and if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. So whatever will happen on Wednesday, I will give you the frequent updates, and the summary of whatever he is going to say, whether the Fed chairman is bullish, or bearish also. I will discuss everything. Now the probable movement, it is very, very simple. See, in the bull side, there is a trend line clearly, and S&P 500 will not be able to move up, or any upward movement will be limited until and unless S&P 500 gives a closing above the trend line. Once there comes a closing above the trend line, in that case that will be considered bullish, and then there will become then there will be more bullish movement. So trend line is clear, but at the same time, it is not just a trend line in the S&P 500. If the Dow Jones remains restricted, and if it gives a closing inside the Ichimoku cloud, then it will become more bearish. And although and also there is the bearish pressure on the weekly chart. So this means that once it gives a closing inside the Ichimoku cloud, then it will feel more pressure, or there will be more or the heavy pressure on the Dow Jones. When there comes a heavy pressure on the Dow Jones, in that case even Nvidia and Apple, which usually goes bullish or remains always bullish, won't be able to help the S&P 500 as such, because in that case the S&P 500 will try to move up, but it will struggle. Yes, in that case what can happen is that the S&P 500 can try to sustain. That is possible. But more bullish side movement when the Dow Jones is under pressure, or when the Dow Jones is feeling the pressure and is trading, that is not possible. So in this case any bullish side movement will be limited. Once the Dow Jones clears these the moving averages, clears means closing. I'm talking about the closing. Closing is important in the stock market. Once there comes a closing, first closing, second closing, so these closings will actually help the S&P 500 to move up, because in that case S&P 500 will be free. It will be able to move above the trend line, because the Dow Jones will be trading above these the moving averages. Although there is no clear confirmation that there will be change in the moving averages or not. However, there is a problem. And if you notice, the problem is in terms of the slip, and this is not a bullish slip, this is a bearish slip. The moving averages, because of this particular candle in the Dow Jones, moving averages are kind of forming a slip. This means that if the Dow Jones remains bearish on Monday, or remains like this kind, or gives this kind of very, very minimum movement on Monday and also on Tuesday, in that case a bearish slip will form. It is already under formation. In that case bearish slip will be confirmed. And what will happen when the bearish slip will be there? A very heavy fall, in all of the indices. And this fall not just be there for one day, but will be there for 2, 3 or 4 days. So just like this kind of fall will be there when the bearish slip will be there. So if you are my Patreon community member, then by Monday or Tuesday, okay, I will confirm whether the slip is there or whether the slip is forming or not, because it also depends on the closing, okay, the percentage movement and all of these are factors. But clearly as of now, okay. But yes, if there comes somehow there comes a good bullish movement for 2, 3 or 4 days continuously, in that case there will be a crossover in the moving averages. In that case it will turn bullish, means not absolute bullish but more into the bullish side, like 60% bullish, 70% bullish or so. Okay, so this is this particular zone is very crucial for the Dow Jones, very crucial. And it is not just crucial for the Dow Jones, but it is also crucial for the Nasdaq and for the S&P 500, right? So here the picture is clear that the bullish movement will happen only if the Dow Jones gives closings, minimum 1 to 2 closings above these are moving averages. In that case, slip will be cancelled, okay, and then more bullish movement will be allowed in the S&P 500. Okay, in case of the fall, okay, see, fall will happen or will come into the picture only if the Dow Jones forms a slip and comes down and closes either inside the Ichimoku cloud or below the Ichimoku cloud. Okay, in that case the next heavy support is the 200-day moving average. Okay, so any fall here in the Dow Jones will trigger heavy fall. Any small fall or little fall in the Dow Jones will trigger heavy fall. Why? I've given you the reason, the slip. Okay, because of the slip. Okay, so what it means for the S&P 500? S&P 500 will be able to sustain around here. Okay, why? Because there is this was the lower zone of the confluence zone, okay, and now the confluence zone, okay, it is out of the picture, but still, okay, it was a confluence zone. So any fall in the S&P 500 will be limited to here, or you can say in from the previous close, okay, you will say like 1%, 1.5% or so. Okay, more fall or more than 2% fall will be there only when the Dow Jones forms a slip, confirmed slip, and there comes very heavy fall in the Dow Jones move. Okay, and at the same time the S&P 500 loses the support of the confluence zone. When it loses the confluence zone, then there is then there is nothing to support the S&P 500, okay, other than the Ichimoku cloud itself. Okay, so this will be there. And also in the bearish side, so we have the 200-day EMA. Okay, so we have the 200-day moving average here to support the fall, okay, in the Dow Jones, and here we have the Ichimoku cloud, okay, to support the fall of the S&P 500. But once again, for now, because it is absolute bullish, any fall will be limited to the confluence zone, 1%, 1.5% any fall. Okay, and then it is expected to sustain. It will be able to sustain, it will be able to move up again, provided that the Dow Jones sustains. Okay, and Dow Jones doesn't form a slip, rather Dow Jones gives a little bearish movement or so, and then again it regains. The problem will happen to the entire market because of the slip, and slip. Otherwise nothing. Otherwise the market is good to sustain. Market has entered into the condition to sustain. So this small zone of the Dow Jones, okay, will be very decisive for the entire market. In the bull side, the targets, okay, because it is already trading, okay, at means it is the S&P 500, okay, it is giving all-time high levels every other day. So as of now, we can think of 5,400, 54xx in terms of the target if it is able to move up, if it keeps on moving up. Okay. And the Dow Jones, okay, for the Dow Jones the targets will be the same, okay, the recent highs. Okay, and for it to move up to the recent highs, the Dow Jones must get a confirmed bullish crossover in the moving averages, otherwise it will not happen. Okay, no matter what happens, means if there won't be any bullish crossover, then no, okay, any bullish movement will be restricted, okay, or it might be a trap and it will fall and it will come down. So the slip is there, okay, that thing is there, and here this kind of movement, right? But everything will be very much clear on Wednesday. Okay, Wednesday will be heavily volatile, okay, very critical, because the inflation data will be published before the open of the stock market, and then the FOMC, okay, the second day of the FOMC decision will be there, and then the press conference of the Federal Reserve Chairman. So the entire day Wednesday. And yes, there is one more thing. There is a possibility that on Monday and Tuesday there might not come any significant movement, just a little up down, because Wednesday is going to be heavily volatile. Okay, so generally it happens that before this the mega event, the market gives very limited movement. Okay, but in the recent times we have seen that especially the S&P 500 and the Nasdaq, not the Dow Jones, S&P 500 and the Nasdaq, that they generally try to move up irrespective of what will be the outcome. Even before the mega event they try to move up. Okay, and then there comes a mega event, then there comes a fall, intraday fall, then recover, means some kind of very rough movement is seen. Okay, so there is no guarantee that if the S&P 500 is moving up, then during the FOMC, the press conference, it will come down. No, it can keep on moving up if the Federal Reserve Chairman, if he goes dovish. Okay, it all depends at what happens. So if you are my Patreon community member, so then I will give you these the updates just like every other day, but on Wednesday I will give you the frequent updates. Okay, especially during the press conference, so that you can make the changes to your trades accordingly. Okay, and if you have not yet joined my Patreon community, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So guys, if you have any questions that you want to ask, okay, then you can ask your question through the comment section. So guys, this was the S&P 500 weekly technical analysis for the week of June 10th, means from June 10th, which is Monday, to June 14th, that will be Friday.